Hey, welcome back. We are going to do another lab now, and it is using some capital budgeting analysis, or sometimes called cash flow analysis. We call this a prescriptive analytics technique because it looks at varying assumptions to help us decide whether to invest or not. So it'd be typically used like, should I get a new piece of equipment, and if so, what should it pay off? Now, I have done some consulting for J.B. Hunt, a big trunking company, and usually what we decide is, hey, should we invest in a new truck, a new trailer, or some logistics software? And so we're really looking at that and trying to see what the best payoff. There's lots of reasons to decide one or the other, but we have some quantitative reasons, which we call capital budgeting. So to get started, let's go ahead and carefully specify the question. And that question today is, how sensitive is the internal rate of return to given changing assumptions of the required rate of return and annual cash flow? And so we're going to take a close look at that. You might want some type of finance background or accounting background to really get the full impact out of this. This particular lab does not have any data that needs to be uploaded. You typically do that here. And so we don't need to update anything. I usually suggest starting with a new chat. That's just to kind of clear it so you're not doing anything that was there before. And so I think we're ready to go. So we've started a new chat and there's no additional data, so we're going to go ahead and start applying techniques. Now the internal rate of return says, and you can think of it as a return. If we make an investment, in this case year zero, we're going to pay $50,000, and just for kicks, let's just say a piece of equipment, and it's going to be $50,000, perhaps to run AI or something like that. But we see that the cash inflows coming in each year from years 1 to 7 is $10,000, and we want to know what return that gives us. And so we have kind of the outflow and then the inflow, and we can ask this. Now you could ask this of a financial calculator. You could ask the same question on Google and get an answer. It works fine. I do it typically in Excel, but this will get us the scenario we need to get started and then to make various assumptions. And so we're just going to go ahead and provide it with what I'll call a base scenario, and then we're going to change some things up and see if it still makes sense. So this has a return of 9.2%. So let's say if inflation is 4%, hey, looks like a good deal. But if I have an alternate investment that might return 12% or 13%, I may want to choose something else. And so this just kind of gives us a benchmark of what that return might be. Now, anytime we do something like this, what are the chances it's going to be exactly 50,000? The return is going to be consistent every year at exactly 10,000. Well, may or may not be. So let's see if we could vary that up. Instead of negative 50,000, it's negative 40,000 to 90,000. And we're going to go ahead and give it a step value. Says, hey, instead of evaluating it every dollar, evaluate it at negative 40, negative 50, negative 60, negative 70. Why the negative? Cash outflow. Why the positive? Cash inflow. Okay, so invest or get the return. Now for years 1 through 7, and we could change that to 1 through 6 or whatever we like, but let's vary the cash inflows. Instead of being 10,000, let's vary it between 8 and 20,000. And then evaluate the internal rate of return. And so we're doing kind of a sensitivity analysis and trying to see what that might look like. Okay, so this is going to provide us a data table, and the data table will provide a way to look at all of these various scenarios based on different year 0 cash flows and different years 1 through 7 cash inflows. Now, there's no reason you have to have the same amount every year. You could certainly specify more, and that might be reason to do a spreadsheet to offer more possibilities. But let's just kind of look at this. If it's negative 40,000 is the outflow and the cash inflow is 8, we get a return of 9. But if the return each year gets higher, instead of 8,000 per year, we're going to have 7 years worth of cash flows of, say, 16,000. And then the internal rate of return will be 15%. And you can see different scenarios here. Looks like we went all the way up to 90. Looks like it's doing a good job of going in steps of 10. And now we see, hey, if the costs were 90,000 and we only got 8,000 per year, it looks like a no-go here. You're going to get a negative return. But if you got all the way the highest to 12%, then that would allow us to take a look at that. And so just consider that. A lot of times this is compared to alternate investments. And so you can say, okay, let's figure out our best case scenario. So if I went to JB Hunt, they pretty much know how much a truck is going to cost. They pretty much know what it's going to return. And so they've got some pretty good ideas. And so these aren't really assumptions anymore, unless, the macroeconomic environment changes, interest rates change, and so forth. A lot of times these are done in comparison to a benchmark as well. Like, it's got to be more than money costs. And a lot of people don't think very much about money costing them, but all companies, get money either from the bank, which let's say costs 5%, or shareholders that expect, say, 10%. And so if they're not at least making that amount of money, they ought to just return it, frankly. So that's something to think about. As we go to tell the story, we want to now provide this as a heat map. And so this allows us to see all the scenarios at once and using the visualizations. Now, as you probably know, visualizations are a much easier way to encapsulate. I mean, we could look through all 42 of these scenarios and kind of see a trend. But if we did a heat map, perhaps we'll be able to see it a little clearer on what the trends look like, kind of where the cut line is. Let's say we have to make at least 10%, okay? Which scenarios allow us to make 10% of those realistic? And so as we do a heat map visualization, we're able to see both the numbers and also see kind of the hues or the heat that is included. So this is all computing an internal rate of return, and the things that are varying are the annual cash flows and the initial cash outflow. So again, outflow is 90,000 and the annual return is only 8,000. That looks like a no-go. But if it's 90,000 and the annual return is 20,000 and we get a 12.45%, perhaps that makes sense. If our cost of funds are 8%, maybe that makes sense. Or if there's some other investments that may pay off better, maybe we do those instead. And so we call this kind of a capital allocation question, where the capital allocation is really saying, okay, we're going to make some comparisons based on everything we know and make a decision. And I like to call this prescriptive analytics, because prescriptive analytics tells us what shall we do. So in order to finish this up, I want to output the heat map as a .png file. That way I could just send that heat map alone, or I could include it as part of an executive summary or a full report. And so that would be included there. And then usually what I ask students to always do, and actually what I do for myself, is I output the prompts and kind of put them all together. One, so I can kind of see what I asked it to do. And two, if I wanted to regenerate it, that would be pretty easy to do. So here is that visualization, and it's given me a link now to that file. And so I could click on it and it would show up in my downloads area. And I could do the same thing in terms of outputting the prompts to a Word file. So it's going to provide that. In a Word file, you could also have it display it to the screen, and then I can do cut and paste, or just copy the text and then copy it in somewhere else. So there's some options of how to do that. But looks like we're going to wait momentarily for the prompts to show up in a Word file. I find that the display is often much faster than going to a Word file. And so it looks like it's provided a file, and here is the link to that file, and I can click on it and it would show up here. Maybe the last thing I'd show is that with each of our prompts, it will run it will run Python. And so you can kind of see exactly what Python's asking it to do. You can see that further up here, anytime we asked it to do something, it wrote some code. And then we can copy and paste. If we happen to be good at Python, which I hope we're all starting to think about, then we could modify it there as well. But it's kind of a good way to see exactly how it interpreted my prompt. So that completes this lab.